Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss the divergence between stocks that benefited from the COVID-19 shutdowns and the vaccine hope trade. So, Phil, it's really interesting. If we take a look at these first couple of charts here, we can see the two differences in the markets there.
Yeah, I mean, we're taking a little bit of a breather today, but yesterday was a pretty clear reaction to everything that we've been seeing and talking about for the last, I guess, 8 or 9 months. So all of those work from home, the companies that benefited from us being at home are not performing so well. And all of the companies that were really beaten up because people weren't traveling and weren't staying in hotels and weren't going on holidays have done really well. We saw oil up about 10%. It's up a little bit more today. We actually yesterday saw gold down, although it's bounced a bit today. It was totally a old economy risk on trade, and you can see that airlines were up. Zoom, which we're all pretty familiar with now, lost some of its gains. So it really was an unwind of the COVID trade.
I think one of the interesting stories of 2020 has been the retail trade. It really has been incredible to see how this is playing out.
Yeah, and there was some evidence yesterday. We had quite a lot of retail back into the market. It looked like they kind of lost a little bit of interest, having hit sort of 20% of total market value traded. And it looked like they were back a bit yesterday with some strength. What's surprising is you would think, looking at the favorite stocks of retail, it's a lot of brand names. It's things like Amazon and Facebook that you see a lot of retail participation in. That yesterday's unwind of the work from home trade might have actually hurt that portfolio, but Goldman Sachs keeps track of it, and it actually looked like it outperformed. So the good news for all of these new retail investors in the market is it looks like they've actually outperformed the market and done pretty well with their investments from earlier in the year.
Let's talk about the effectiveness of vaccines. And with this next chart here, it looks as if Pfizer's COVID-19 drug fits right in the middle of the efficacy rate. I was really surprised to see the effectiveness of the flu shot, which is so common. We're told to get this every year.
Yeah. Part of it's because there's lots of different flus that are out there.
Right.
But I mean, the reason that the market was so strong yesterday was the fact that people had been expecting a vaccine. They'd been expecting the vaccine news sometime in November. What they weren't expecting was for it to be quite as effective as it is, because they know the flu vaccine's not that good. And coronavirus is like the cold, which we still haven't managed to find a vaccine for. So I think hopes for a really effective vaccine were actually quite low. Now that we've got a pretty effective vaccine, I guess economically, if we can get it distributed, everybody can pretty safely get back to work without worrying about catching coronavirus. So the lead time to getting people back into normal activities has shrunk, because we now have a pretty effective vaccine that looks like it'll work on most people. And so that's why the market reacted as strongly as it did. It's why energy stocks have rallied. Basically, a lot of people's projections were we will get back to normal in 2022. And now I think the projections are talking about June, July next year, where we have pretty widespread vaccinations across most of the Western economies.
Right, and that certainly is encouraging news. I think there was a collective sigh of relief to hear just how well the Pfizer vaccination performed. But of course, so it always comes back to when this can be manufactured at scale, how distributed it will be, if people actually want to take it. And my question to you is, how long can businesses hold on, though?
Yeah, and we've been seeing more and more signals of people defaulting on rent, people closing up, some of the temporary laid off people looking now like they're permanently laid off. And so there's a chart today that I found that looks at just a basic poll of some of the different businesses that don't know if they'll be able to make rent payments. And you can see restaurants, retailers right there, gym and fitness, entertainment, like all of the industries we know have been pretty close to shut down by coronavirus, are really struggling. I guess the flip side is everyone's talking about the fact that now we have a vaccine, now that we have quite a lot of excess savings in the system, the stimulus bill might not need to be as big, but potentially what we want to do is make sure it's targeted. And these might be the places you want to target it, maybe more PPP to make sure the rent gets paid so that the REITs themselves, all of the real estate investments and sort of real estate owners don't default, and we have a credit crisis that trickles through from what's going on. But you can see there's a lot of people that are in more distress than a lot of the other economic indicators we've been looking at would indicate.
All right, Phil, great stuff. Thanks for joining us on Trade Talks.
You're welcome, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.